Good afternoon, everyone. Welcome to this workshop. Now, in this workshop, the idea is to give you an idea of what would you learn in ACCA. Okay. So what we'll be doing is we'll be taking up one topic, from the ACCA program, and then we will understand few concepts around that. Some of those things you would already be aware of. Some of those things may be new. So we'll actually, deep dive into few of the topics, and then towards the end of the workshop, I will be giving you a link for a quiz to test your understanding, and whoever wins in that quiz, we will announce the results. So stay tuned throughout the session, and there are some Amazon vouchers to be won if you perform well in the quiz. So that is one thing which is there for as a takeaway, and not only that, you will get a flavor of what is there as a part of this particular course, right? So just a quick introduction of myself. I am Suraj Lakhotia. I am a chartered accountant and SEMA UK qualified. I am an all India rank holder in CA. Post that, I pursued CIMA UK, and I have been teaching students of finance and accounts, especially in financial reporting, accounting, across CA, ACCA, CMA, CP, right? So across all these spectrums, I have been teaching. Apart from that, I have a first-hand corporate work experience of over 7 years. Now, before I begin, if anyone has any specific question, please let me know. Otherwise, I will start off with the session. I do have a list of questions which has been given by my team, and those of you who have joined in late, we will be picking up a topic, and we will be understanding the concept, and then we'll be seeing how does ACCA test students, and you will also get a flavor of what you get to learn in ACCA. Whether or not you choose to pursue ACCA, these concepts that you are learning today will be useful somewhere or the other in your finance and accounting career, right? So without much of time, let me just share my screen, and I want all of you to interact. Okay, I'll be asking some questions, and I'm expecting a response from all of you, so that this becomes an interacting session and not like you're watching a TV series something on, and someone is talking and you're just listening to that, right? So we'll start. Let me just share my screen. So today the topic that I have chosen for this particular workshop, and when I say workshop, you have to work along with me. Only then you will gain some value out of it, right? So as a part of this workshop, we would be taking a topic from FR. This is in your level 2, and we would be discussing about various forms of non-current assets like PPE and investment property, and also relationship or understanding about what are inventories, right? So that is the broader thing that we learning as a part of this particular session. Okay, now before I jump into the session, let me ask you one very simple question. Let us say I am a business, and this business purchased land. The business has purchased land. What will be the accounting entry for purchase? Say, for example, they have purchased land by paying 50 lakhs. What will be the accounting entry for the particular purchase?
Land account debtor to bank account.
Land to bank. Now, where will you show this land in the balance sheet? Land to bank. Okay. Right. So everybody said land account debit to bank. This is, all of us know this. Now, if I prepare a balance sheet, how will you show it in the balance sheet? On the asset side. Okay. Under asset side, where will you show this? PPE. Someone said fixed asset. Right. Now, I did not give you any other information. I just said we purchased land, and I asked you an entry. This entry is perfectly fine, land to bank, and we said we'll classify it under PPE and fixed asset. As a student of accounting, as a student of finance, one thing that you have to keep in mind is things are not so simpler, especially when you move on to a professional course. So if you are looking at a professional course, things are not so simple and straightforward. Okay. So you cannot just say that, just by looking at the topic or just by looking at the entry, you cannot say that this is a fixed asset or PPE. As you move to a professional course, you have to ask, why did we buy land? What is the purpose? Only then we can classify and we can say whether the land is a fixed asset or land is something else. For example, if I say this particular land is purchased for, let's say land is purchased for office premises. We purchase land so that we can build a building, or we can have a building on the land, and we will use it as our office premises. If that is the case, then whatever you said, PPE is absolutely fine, is absolutely correct. I'm not disputing that. But then, if I tell you that this land is purchased by a real estate developer, he has purchased this land. And why did he purchase the land? He purchased the land so that he can construct buildings, he can construct flats on this land, and that can be sold to others. In that case, tell me, will you call it to be a property, plant, and equipment? If there is a builder whose business is to construct buildings, sell those buildings, is that considered to be property, plant, and equipment? Anybody, answer to this question? If my business is to construct, build buildings or buy and sell land, then can I say it is item of PPE? Okay, so if my business is building, if my business is to construct houses, then I will say this is my inventory. And this distinction is very important because, see, when you were in your maybe 12th standard, or when you did your graduation, or even at a CA foundation level, whenever somebody says purchase land, the default choice is it is an item of property, plant, and equipment. But as you move up, as you come to professional courses like ACCA, or as you move up from CA foundation to CA intermediate, or from BCom to a professional course, you have to ask why. Why did we purchase the land? And accordingly, you'll have to classify the land. So it can be a PPE, it can be inventory, or if it is for purely capital gains. Somebody told me, please buy this plot of land 15 kilometers away from the city. After 10 years, you'll get very, very, amazing returns. The returns will be, 10 times, 15 times, and all of that. So my purpose was, I will buy the land, I will keep the land, I will not use the land, I will sell it after 10 years and 15 years. And my objective there is what? My objective there is to make capital gains. In that case, we call it to be investment. So, same land purchased can be classified under PPE, can be classified under inventory, can be classified under investment property, depending on what is the purpose or what is the objective. Right? Now, if the entry states purchases to bank, or if it is land to bank, it is PPE. Yeah, if you say land to bank, then it is PPE. Okay, otherwise you would say inventory to bank or purchases to bank. Okay, so that is how it will be classified. So classification depends on what is the purpose, what is the objective, and office premises are covered, or if it is PPE, it is covered by International Accounting Standard 16. Please remember, we are doing an ACCA workshop. So that's why I'm giving you the International Accounting Standard number. Indian Accounting Standard, if you say it is AS 10 or Ind AS 16. Inventory is covered by IAS 2 or AS 2 or Ind AS 2. More or less, these are similar, but there are some specific tricky points. And investment property is covered by IAS 40 and Ind AS 40. Specifically in accounting standard, we have AS 13, but that does not clearly give us guidance as to how to account for these investment properties. Okay, so these are the areas that is covered when we talk about IAS 16 property, plant, and equipment, IAS 2 inventory, and IAS 40 investment property. So today what we'll do is we'll understand some things about PPE and investment, basically IAS 16 and IAS 40. Okay. Now, please remember, whether we call it PPE or whether we call it investment property, these are assets. Now, can someone tell me what is the meaning of an asset? Can someone tell me what is the meaning of an asset? Resource controlled by entity, which gives us future economic benefits. So, very good. Entity having control and gives us future economic benefits. So, there has to be control and there has to be future economic benefit. If I don't get any future economic benefit, I cannot call it to be an asset. If I get future economic benefits, I can call it to be an asset. Now, these future economic benefits must be for a period greater than 12 months. That is why, if let us say I have a car and if I do repair, why do I need the repair to be done? Repair is done to maintain the condition. Repair is done to maintain the condition. I am not getting any extra benefit because of repair. I am carrying out repair of a car so that it runs at its expected condition. So this is not an asset. This cannot be called an asset because it is used to maintain, it is used to run the asset in its predefined capacity or in its predefined condition. Whereas, if let us say for the same car, I do some modification, and because of the modification, mileage increases. If mileage increases, what happens? My future economic benefit increases. So when my future economic benefit increases, I have future economic benefit, and if I have control, I can account for this modification as an asset. When I say asset, please remember, assets are shown in the balance sheet. When I say expense, like repair, this is shown in the P&L. So, if I get future economic benefits and that benefit is more than 12 months, then I will classify the expenditure as an asset. So, when I purchase a car, I will get future economic benefits. Now, this can be in terms of, let us say I give it on hire, I'll get future economic benefit, or I will need it for my admin purpose. There is a director. For the director, I need a car so that the director can come to office, he can go for meetings, attend meetings and all of those things. So there also, for administrative purpose, we are using the car, and that gives us future economic benefit by way of some admin benefit or cost savings. And if the control criteria is met, I can say that it is a item of PPE. Okay, so property, plant and equipment, what is covered by IAS 16? First thing is, it has to be an asset. This has to be tangible. So asset which is tangible. Tangible meaning there is a physical substance, car, building, land, and machinery. All of those have physical substance, and this gives us future economic benefits. Then we can consider that particular item to be PPE. Now, two things you have to keep in mind. PPE is used in business for production or supply or for administrative purpose or for rental to others. All these ways give us future economic benefit. We get future economic benefits. Production. A machine is used to manufacture a product, a mobile phone, a car, a computer. You produce, or for supply. I am using this computer for supply of services. Now you may say, sir, what is the benefit you are getting? I have got prospect ACCA candidates, and future maybe they will enroll with me, or I'm giving some form of kind of a program where students will be aware about Indigo. So somewhere or the other, if you're using it for production and supply or for admin purposes, okay, admin purposes, accountant who uses computer for admin purposes, air conditioned office for admin purposes, or for rental to others. Car is given on hire. In that case also, these are called property, plant and equipment. You have to use it in the business and not for sale in ordinary course of business. Now, what do you mean by that? If I'm selling something in the ordinary course of business, then that is not PPE, that is called inventory. So let me ask you one question. There is a car dealer. The car dealer purchases car for office use. Will we classify it as inventory or will we classify it as property, plant and equipment?
Property.
Okay. If the same car is for sale, if the car dealer purchases car for sale, then inventory. Okay. So if it is for sale, it is inventory. If it is for office use, it is PPE. This distinction is very, very important. The car dealer may also have car as property, plant and equipment. The car dealer may have car for sale also, right? Then the classification that you need to understand is, or the item that you need to understand is, it must be for production or supply of goods, admin purpose, rental to others, but not for sale in the ordinary course of business. And very importantly, you must have future economic benefit. You must also have control. Then, very good question. Sundar is asking, if it is for office purpose and subsequently you sell it, then also it will not be called inventory. That will be called, an item or asset, non-current asset held for sale. We classify it as non-current asset held for sale. Okay. So even in that case, you will not call it to be an inventory. You will call it to be inventory when the purpose is at the time of buying it itself, oh yes, I will sell this in the future. Then it will be held for sale. It will be held for sale and then it will be an item of inventory. Otherwise, you will not classify it as inventory. The difference is, if PPE is sold, you will only recognize gain or loss. Whereas if inventory is sold, you will recognize revenue. That is the difference. That is why it is important to classify them properly. Okay. So that is about, inventory, property, plant and equipment. And when you acquire a property, plant and equipment, what you need to understand is, this is used for more than one accounting period. And when you use it for more than one accounting period, so let us say I bought a car, I will use it for 5 years. The cost of the car must be apportioned over this 1, 2, 3, 4, 5 years. So let us say this car is 10 lakhs. This car is 10 lakhs. And the residual value means a car which can be used for 5 years or which has been used for 5 years. The residual value, if I want to estimate today, the residual value is, let us say, 2 lakhs. 5 years is the life, 10 lakhs is the cost, residual value is 2 lakhs. Then we say depreciable value or depreciable amount is 10 lakhs minus 2 lakhs, which is 8 lakhs. So the cost of the car, which is 8 lakhs, the net depreciable value, I will apportion it, or I will charge them to each of these years: year 1, year 2, year 3, year 4, and year 5. Okay. So 8 lakhs, you cannot say 8 lakhs is not a cost. It isn't. It is finally it's a cost that will be allocated to these 5 years. The various methods are there. You can use SLM, which is the straight line method. I'll not get into too much of depth of that. Or WDV method, percentage basis. So let us say when you say WDV, 20%. On this 10 lakhs, every year you will charge 20% depreciation. When you say SLM, you will take depreciable amount divided by number of years. So 8 lakhs divided by 5 years, you get 1.6 lakhs per year. Now you might be thinking, sir, depreciation is so easy. Are we going to learn such easy things in ACCA? Depreciation calculation is easy, but when you add more complications, I'll come to that also, then it becomes slightly difficult. Okay, I'm not getting into depth of depreciation because all of you know how to calculate depreciation, right? So that is about introductory part to property, plant and equipment. Coming to investment property. Investment property is covered by IAS 40, and please remember, IAS 40 covers land or building or both. So when I say property, it has to be land, building or both. Okay, if there is any other asset other than land, building or both, that is not covered by IAS 40. That will be covered by other standards, that is IAS 16. Okay, so if it is land or building and the objective is rental income or capital appreciation, then you classify it to be, or you call it to be, an investment property. Okay, very simple definition. Investment property, land or building, purpose rental or capital appreciation, then it is called investment property. Whereas here what we said, PPE, this PPE stands for property, plant and equipment. Property is your land and building, plant, the plant and machinery, and equipment part related to plant and machinery. Okay, so your air conditioning system, your factory machinery and all of those are covered under plant and equipment. So property, plant, equipment, investment property. Now investment property, as I told you, it is for what? Earning rental income or capital appreciation. Now I have a case for you. If I have a car, I have a car. This car I have purchased purely for rental purpose. Means what? I'm using this car only for rental purpose. I purchased the car, it is only for rental purpose. Now tell me, should I classify it under IAS 16 as PPE or should I classify it under IAS 40 as investment property? Please remember, objective is to earn rental income only. So in that case, should it be property, plant and equipment or should it be investment property?
IAS 40 covers only land and building for both.
Okay. PPE, investment property, others?
It's 1930.
Others? Car will not come under IAS 40. Very good. So one thing that you have to keep in mind here is that, okay, I told it very clear, only land or building. So any other thing, rental purpose, whatever you take will not be covered under IAS 40. You have to take it under 16 only. Please remember, in 16 also, that is property, plant and equipment, rental to others is covered. So if it is land or building for rental to others, IAS 40. If it is other asset for rental to others, 16. Okay, so that is one thing you have to keep in mind. Just let me plug in the charger. In the meanwhile, any question or query you have, you can let me know. So again, if land and building is for administrative purpose, in that case also it will be classified or it will be called property, plant and equipment. Okay, so what? Let me just adjust the camera slightly. What we need to understand is purpose. So the entire objective is, what is the purpose? If the purpose is administrative purpose, IAS 16. If the purpose is, okay, I want to earn rental income, then investment property. Okay. Now, having understood this broadly, and see, I'm not covering the entire standard detail. I'm giving you an overview of what is IAS 16 and IAS 40. Definitely, it will be helpful somewhere when you are studying or if you're going to job interviews and all. This will be there. This is one standard which is tested, a lot of time. Okay. Now, I will give towards the end. I will, I'll take your queries, brief comparison. I'll talk about the subjects for those of you who are not aware of it. Towards the end, I will give you a Google form link which will have the quiz, and you have to attend the quiz. The one who scores the highest and the fastest will be, given the award. I think we have vouchers for top 2. Okay, and we'll get the results on second. So hear the class very carefully and very properly. Okay, so now whenever we look at any standard, accounting standard we call, largely for assets and liabilities, you have initial recognition. Okay, then we have subsequent measurement, then we have de-recognition. Now, what is the meaning of this? Initial recognition means how will you initially recognize an asset in the balance sheet? So, for example, property, plant and equipment. The day you purchase the property, plant and equipment, at what value will you record the entry? So, the answer is both for IAS 16 and IAS 40, you will use cost. All the cost incurred to bring the asset to its current condition and location will be included as a part of your cost of the asset. So let us say I paid 10 lakhs to buy a car. I will say car account debit 10 lakhs, to bank 10 lakhs. I paid something as registration charges. I will add that to the cost of the asset. All the costs incurred will be used to initially recognize. Initially recognize means first time when you are passing the entry to recognize the asset in the balance sheet. In that case, you will say you will use the cost model or the cost amount. Okay, then subsequent measurement means after you have initially recognized, how will you subsequently measure the asset? For that, under IAS 16, you have cost model and revaluation model. And under IAS 40, you have cost model and fair value model. Cost model and revaluation model, cost model and fair value model. Cost model means I will recognize at cost and I will reduce depreciation every year. And there is one more concept called impairment. I will not get into depth of that. If there is any impairment loss, that also I will adjust. So cost minus depreciation for now. Cost minus depreciation is the cost model. Same thing is applied here also. Cost model means cost minus depreciation. Now, there is something called revaluation model or fair value model. Revaluation model is for property, plant and equipment. Fair value model is for investment property. Now, what is this revaluation model? Revaluation model basically says that, just for example, if I purchase some property 20 years back, land at 10 lakhs, I purchased land 20 years back at 10 lakhs. Today, the worth will not be 10 lakhs. Worth will be maybe 1 crore, maybe 5 crores. We don't know, right? So this showing this at cost may not be appropriate. So what the standard says, see, you are saying land is at 10 lakhs, but today if you have to go to the market, the land will be worth 15 lakhs, maybe 20 lakhs, 30 lakhs, 50 lakhs, 1 crore. The value is much higher. So what the standard says is, see, this land showing at 10 lakhs may not be appropriate. If you want, you can revalue the land or you can fair value the land. Fair value is for IAS 40, revalue is for IAS 16 and bring it to its current fair value. So, for example, 10 lakhs land is worth, let us say, 1 crore. 10 lakhs land is 1 crore. So, what the standard says, this land of 1 crore, this land, today the worth is 1 crore. Don't show it at 10 lakhs, show it at 1 crore. Increase the value to 1 crore. Now tell me, what is the increase in amount or what is the increase in value, the quantum of it? 90 lakhs. So you are saying land debit 90 lakhs. Here also you are saying land debit 90 lakhs and credit will be to revaluation surplus. There is a term called other comprehensive income. You will understand this in detail if at all you pursue ACCA. Revaluation surplus 90. So on one side, asset increases by 90 lakhs, reserves also increase by 90 lakhs. That is for PPE. For fair value model, what it says is you debit land and whatever is the gain, you take it to P&L. 90 lakhs. So that is the difference. 90 lakhs to revaluation surplus, 90 lakhs to P&L. Sir, why this difference in treatment? Because our purpose of 40 is what? To make gain on sale or to earn rental income. So that is why if at all there is a gain, we can take it to P&L. But sir, why not the same thing here? here, because our purpose is not to make a gain out of it. Our purpose is to use it for administrative purpose. So by revaluing, you should not take unnecessarily profit to the P&L. So revaluation for IAS 16, you should take it to OCI or the other comprehensive income. For investment property, you should take it to P&L, that is directly you can recognize it as a thing. Now, sometimes what happens is when you're doing revaluation, the value may come down also. I thought property is worth 1 crore, but the property is worth only 60 lakhs. So if there is a downward revaluation, you will reduce asset and you will take the loss to P&L in both the cases. Here also you will reduce the asset and take the gain or take the loss to. So please remember, P&L increase in value because of revaluation, increase the asset, credit revaluation surplus or P&L, reduction in value of asset, reduce the value of asset and debit the P&L. Okay, so that is what is the treatment for revaluation. And one very important thing is, if you are following the fair value model, the gain or loss on fair value is taken to P&L and hence there is no depreciation. There is no depreciation if you are following fair value model for investment property. If you are following cost model, there will be depreciation. Okay, so this is a broad overview of how do we account for PPE and investment property. And subsequently, if this asset is no longer required or this asset is sold off, disposed of, then you will de-recognize. Recognize, get into the books, de-recognize, move it out of the books. Okay, so that broadly covers the areas around property, plant and equipment and investment property. Pretty similar. I thought I would give a quick recap kind of a thing for all of you, which will help you to understand what are the intricacies. Now, the difference when you see between BCom, if you are pursuing, or you're pursuing you've just completed 12th and all, the orientation is different. Okay, the orientation is pretty different, where you have to understand what is the purpose, why are we using it, what is the accounting treatment, is this right, is this not right. So there'll be a lot of questions which you need to get the answer for, right? So that is a broad part of what we are understanding as a part of property, plant and equipment and investment property. Now, if anyone has anything to ask in these two topics, you can let me know. Okay, sir, when it comes to IAS 16, depreciation is charged on cost, how it affects when revalued. So what happens is, let us say there is a building, cost is 10 lakhs. Okay, revalued amount is 50 lakhs. Now, considering this 50 lakhs, you will depreciate over balance useful life. So considering 50 lakhs, you will depreciate over balance useful life. Now, same thing, if the value goes down, this instead of 10 lakhs, it has become 7 lakhs. You will now consider 7 lakhs and depreciate. Okay. What happens when IAS 16 change to IAS 40 or vice versa? So if you are moving from PPE to investment property, if it is cost model, there is no impact because in both the cases you are following the same method. But if it is the revaluation model, what you need to do is you need to revalue under PPE and then transfer it to IAS 40 investment property. If it is under investment property, again do the revaluation and bring it to property, plant and equipment. Okay, that is how it is done. Now, there will be a quiz link which I will be sharing in about 10 minutes time. Okay, you can take your time, 5 to 10 minutes to answer those questions. I have covered all of them in the brief session that I am conducting. Now, once you submit, you will get a score. We will rank the final scores and we'll let you know who are the top 2 based on the time and the score. So highest score and fastest time. Okay. So so you can take your time to ensure that you get 20 out of 20 also. There are 6 questions which I will be sharing in some time. Now, coming specifically to few questions, what some of the students have asked, and if you have any more questions specifically related to ACCA, please let me know so that I can answer them as I'm continuing with the session. So any questions, please feel free to ping it in the chat box, A lot of you might be, wanting to know about what is ACCA, how is it helpful and all of that. We do have detailed videos on them. But again, if you have any specific question, I'll be more than happy to answer. This session was more to give you a perspective of what kind of things you will learn as a part of ACCA, and the questions that you will be answering will help you understand what kind of questions are tested in the examination. Okay, so objective type questions, what is the type of questions that are tested, and how can you calculate the numbers and all of that. That you will get a sense of it when you attend the questions. So let me just open my. Let me just share another screen. Just give me a moment. Okay, paper exemption I'll talk about. Pursuing that also I'll talk about. Just a moment. So now some of you had asked the subjects. Okay, so subjects, if you can see, there are 3 levels: level 1, level 2, level 3, applied knowledge, applied skills, and professional. You can think of it as foundation, inter, and final, those who are pursuing CA, right? So the applied skill levels, applied knowledge level, you have business technology, management accounting, and financial accounting. So, business technology talks about various aspects of business. Management accounting regarding your, cost accounting related aspects regarding, costing and decision making part. Financial accounting is what are financial accounting or normal accounting, what we call. Coming to level 2, we have corporate and business law that talks about the law related aspects. Performance management, which is linked to management accounting of level 1. Then taxation, which is, to do with the tax part of it. Financial reporting is advanced. See, financial accounting, financial reporting. Now, this financial reporting, you'd be surprised to know that a lot of this, what I teach at level 2 and what we just now understood as, IAS 16 and IAS 40, a lot of these are taught at CA final level. Okay, so level 2, applied skills of financial reporting. Here, what you can see, this covers basic aspects what you learn at a CA final level of financial reporting, consolidation, a business combination, financial instruments. All of those you don't learn at CA inter, but these are basic concepts. Then what you do is, considering this financial reporting here, this is again, subsequently at the final level, you have this business reporting part. Okay, so that is linked. Then you have audit and assurance and financial management. Then you have at the level 3, you have SBL, strategic business level, and business reporting. These are compulsory, and any 2 out of the 4 electives that you have to do. Okay, so that is one part of what you had asked. Somebody had asked for fees. Now, fees depends on the type of exemptions you get. So what happens is level 1 and level 2. Okay, depending on your qualification, whether you have completed graduation, whether you are pursuing graduation, whether you have completed CA inter, whether you have completed CA final, depending on that, you will get exemptions for some specific subject. Okay, now it purely depends on what is the current level of your qualification or preparation at the time of registration, and accordingly you will get exemptions for various different subjects. Right, then there are some questions. Let me just take it up again. Sir, if you are doing CA, is it better to pursue the full course of ACCA or claim exemption? You should see, if you are pursuing CA, you should take exemptions wherever you are able to get exemptions, and accordingly you should pursue your qualification. There is no point in doing everything all over again. If you are stuck somewhere, if you feel that something is getting difficult for you in those specific aspects, you can take help of help. But apart from that, if you are able to get exemptions, you should definitely get exemptions. Yes, a lot of students they're doing. So okay, I have various different scenarios to present it to you. There are students who are pursuing CA and also pursuing ACCA. There are students who have completed CA inter, they are working and now they are pursuing ACCA. In fact, one of my friends is doing that. There are students who have completed CA final and then pursuing ACCA. So think of it, if you have 2 choices, if you say BCom versus CA, you'll of course want to hire a CA. Then if you say CA and CA plus ACCA, the CA plus ACCA gets an additional weightage. Okay, so that is where you get additional qualification and the orientation, because in today's time, there is a lot of demand for accountants or chartered accountants who can support the business. It is not about just finding the solution. It is about supporting the business. So you will find people who want to, who are looking for support to the business, where you have to take decisions, you have to analyze, you have to prepare reports and all of that. That is where ACCA gives you a different perspective. Okay, it is not only about writing a particular, or finding a particular calculation. I'll just give you one quick perspective. that will help you, understand. I'll be sharing a sample question that will, help you understand what I'm exactly talking about. So some of you have asked, the difference. What is the difference, right? So here you see this specific question, and this is for all of you who are pursuing. See, whether you take up ACCA or not, it is your independent call. What happens is, especially in longer form examinations. So what happens is, here you have to give a commentary. You have to analyze and you have to explain what has actually happened. It is not about, okay, ROCE is 33% and it is done. No, that is not the case. What is the performance? What is the position? What is the conclusion? So that is also tested, and this helps students to progress faster in their career. Okay, so that is what you get when you have a course like ACCA, and that I personally felt a difference when I completed my CIMA UK, because you had to analyze a business, you have to analyze the industry, and you have to give commentary, and that actually gives you a very different perspective when it comes to your what do you call career path. Okay, concept wise, see, again, if you examine the depth, you will have more depth in CA. If you are examining the testing level difficulties, you have more in CA, but you have flexibility in ACCA. You can write one paper at a time. You have additional, practical orientation in ACCA, which you do not find in a course like CA. And because it is flexible, there is no load to write 4 papers at a time and write a group at a time. You can write 1 paper at a time and you can clear. Knowledge also you get, right? So that is what it is helpful. Okay, specific subject related exemptions, please download our brochure from the program page, and you can get the details there. Now what I'll do is, I have a quiz ready for you, unless you have any more questions. Total cost I have already shared. You can again download the brochure there. Then, sir, CA versus CFA, ACCA, CFA, what is that? Okay, CFA, do it if you want to do something in stock markets, or if you want to do something in investment banking, if that is your calling. CPA, if you want to work for US based companies. ACCA, more for IFRS based company, which is more acceptable across the globe. Sir, is job guaranteed? Wow, what a wonderful question. Is job guaranteed if I complete ACCA? See, once you complete ACCA, there will be a very higher chance, or the chances of your profile being shortlisted increases significantly. That's the first thing. We will give you assistance for placement. We will take you to companies. Every 6 months, 7 months, we keep on getting, every 6 or 7 days, we keep on getting requirements of ACCA. Pursuing ACCA also, if you have completed skill level, then also companies are willing to take you up. But now, whether I will get a job or not, I don't want to make a false promise here. It depends. See, you will pass, but interview you have to crack. Your communication skills is very, very important. Okay, so that is what it is. Now, what I'll be doing is, I will be sharing with you a form link in the chat box. You have take the next 10 to 15 minutes of time and complete it. We have cash prizes, and this is having questions from the workshop itself. Okay, so there is nothing that we have created, or it is out of the syllabus. Out of the workshop, whatever you have understood as far as IAS 40 and IAS 16 is concerned, you can complete it. I'm just sharing the link, and then I will close the session. You take your time, submit the answers, and maybe you would be the lucky one to get an Amazon voucher. Okay, so I'm just sharing 3, 2, 1, and here I go. This is the link I'm sending. Each one of you, you can click on the link and you can participate in the quiz. Let us see who gets the prize or who gets the Amazon voucher. Okay, so I will be again posting it. Somebody joined in and left and joined in. I'm posting it again. Please use the link and you can participate in the quiz. And if you win, our team will get in touch with you. Thanks a lot for taking time out and joining in. And if you want more information, download the brochure from the program page. Get in touch with our counselors. They will help you. And you can explore the course. You can explore the syllabus. And if it fits your overall career goal, then you can definitely consider pursuing it. And one more thing, if you go through an authorized approved learning partner, you would get exemption fees, waiver, and discounts. So that also you should not be missing. Right? Thanks a lot for joining once again. So I'm keeping the meeting open so that you can click on the link if at all you want to. And you can, once you submit it, I will now end the session. Thanks a lot.